Understanding the importance of achieving and maintaining a high credit score has become a top priority in society today. A good credit score is key to your financial life. ScoreNavigator's goal is to enhance the quality of its customers' lives by maximizing their financial and credit worthiness. This includes making sure that credit reports are accurately reflecting financial responsibility and educating the consumer on how finance and credit impacts a vast array of today's decision makers, whether they be lenders, employers, insurers, or other industry. ScoreNavigator seeks to provide financial freedom for its customers by providing the tools to understand and manage their finances and credit. Because having a good financial and credit profile has become essential in our society, ScoreNavigator's target market is enormous. It encompasses a huge spectrum of people and the companies who evaluate their financial stability. Our moderately priced, renowned financial and credit wellness program uniquely analyzes a credit report and calculates how many points are being deducted from our customers' overall credit scores. We are unaware of any other entity that has this capability. Special software analyzes financial data, allowing consumers to strategically spread residual income to stabilize and grow their credit portfolio. An integral part of our program is providing members ongoing up-to-date credit education material so they do not make the same mistakes of the past. ScoreNavigator equips its customers with multitudes of benefits and services. We handle many of the financial affairs of credit-challenged customers, such as budgeting software, which enables them to truly determine whether or not they can realistically afford or maintain obligations such as mortgage and car loans. Our mission through the development and focus on innovating software in the credit and financial industry is to ensure the public will build confidence once again. ScoreNavigator shields its customers from the complexities of financial and credit wellness. This way, they are on the outside looking in. They can best control their lives and be fiscally sound. During the enrollment process, the members establish a username and password and a 4-digit PIN to access the member section. Once enrolled, the members may access their credit reports 24/7 by simply clicking the member login. They will type in their credentials, their username and password, and simply click login. Now, we've established a 4-number PIN for extra security, and these letters correspond to those numbers, and they will change each time. So in this case, it's all ones, so it'll be 4 Ys. Now, the first page they come up to will be what we call the dashboard. Now, the dashboard has a lot of information on there. One thing that they do show is, of course, is the current credit score. What you're seeing here is whether or not the score has either maintained the same, or if it's increased, or as if it has decreased. And in this case, it's gone up 49 points. And what you're seeing over here is the 82 points in deductions. This is an accumulative of all of the point deductions that have been established on this particular person's credit report. So getting back here with the credit score, this is a 3-digit number that expresses and generated by a mathematical algorithm based on a level analysis of a person's credit file to represent the credit worthiness of the person. It's designed to predict risk, specifically the likelihood of whether or not they will become seriously delinquent on their credit obligations in the next 24 months after scoring. A credit score is primarily based on credit report information typically sourced from the credit bureaus. Lenders such as banks and credit card companies use credit scores to evaluate the potential risk posed by lending money to consumers and to mitigate losses due to bad debt. Lenders use credit scores to determine who qualifies for a loan, at what interest rate, and what credit limits. Lenders also use credit scores to determine which customers are likely to bring in the most revenue. The use of credit or identity scoring prior to authorizing access or granting credit is an implementation of a trusted system. Now, credit scoring is not limited to banks. Other organizations such as mobile phone companies, insurance companies, landlords, and government departments employ the same techniques. Now, credit scoring also has much overlap with data mining, which use many similar techniques. These techniques combine thousands of factors, but are similar or identical. Now, how much does a specific change affect a credit score? The answer is usually, well, it depends, and for good reason, because credit score developers don't reveal the exact point deductions. The weight of any given activity can also vary for different credit histories. Within a scoring model, there's more than one formula used to calculate a score, and each formula is designed for a category of consumers with similar credit profiles. The information in your credit report determines which formula is being used. If you're new to credit, for instance, the scoring model will put you in a category for people with young credit histories and use a scoring formula specific to that group. Such groups are called scorecards. Within that group, recent inquiries may cost more points than they would for a different group. The number you see here is the amount of points that may be available to you, right here, this 82, based on different recommendations our software provides members and loan originators. Our proprietary scientific analytical mathematical software, point deduction technology, is used to analyze your credit data. Credit scores range from 300 to 850, leaving the possibility of capturing up to 550 points. The software recognizes many factors used in credit scoring and assigns a point deduction number per item on a credit report. The assigned numbers will range from 0 to 100 plus, depending on the type of accounts being reported. For this member, the current point deductions again is 82. Now, we also provide them with a credit accounts by category. So what you're seeing here is you're seeing that there's a total amount of accounts of 11, of which 2 are public records and 3 are derogatory, and there are 6 in good standings. So you're seeing out of 11 accounts, 5 are in the negative, and 6 are actually being reported in a positive manner. And the total amount of points again is 82. But as you can see, the good standing accounts add up to 78 of those 82 points. So we have a saying that positive credit or lack of positive credit has as much or more impact on the credit score than negative credit does. And you'll see when I go onto the credit file, the separation of the points per trade line. Now, ScoreNavigator also posts alerts and notifications on a credit report. One of the key notifications that they get, now they also get an email from this, but we want to let them know when the actual report date that their creditor does to the credit bureau versus the due date, because a lot of times the due date falls a week or so after the actual report date. So if they want to get credit for it that month, obviously we want them to pay it as quickly as possible. Usually a lot of the recommendations are as soon as the bill becomes available, you'll be on the safe side if you go ahead and make the payment then instead of the grace period that they give to you. One of the next features that we provide for them is financial analysis. Now, the financial analysis has a lot of great information. One thing is, of course, we're going to show what the credit score is, what their total balances are, and what their monthly payout is. We have a video that's here that shows them not only how to navigate through this and use it, but why it's so important. Because we know that in order to successfully manage your credit, you're going to have to be able to manage your finances. So that's very important. So what will happen here is once they become a member and their credit report is pulled, it's going to go ahead and pre-populate all the information that's showing on the credit report into here. Now what the movie does is it shows them how to simply add some of the other information. Their gas bill, electric bill, internet service, those type of things. They can also come in and mark down what their due dates are. And if they wanted to, they can actually change whatever the monthly payment is or the balance is based upon what the current is for today for them. The goal is to get down to here. We want to know what their debt to income ratio is, but we also want to know what type of disposable income they have. And so that way, some of that money can be applied towards either paying balances down or to establish new credit. So that's very important for them. We also have a financial calendar where the information's on here, so that way they know where they're paying out. So if the report dates are going to be easier for them to move by looking at, they can contact like Verizon and say, look, can I change that pay date to this date? And DirecTV, we show them how to do that. So that way they'll have enough money built up to be able to, again, pay by the report date instead of the due date. The next part that we have for them is the actual credit file. Now, the credit file will show when what their current score is, if it's up or down or the same, and the amount of point deductions. It also logs in the last time that it displays the last time they've logged in and how many times. Now, this is important for us too because they get alerts sent out to them if they've gone longer than 7 days without logging in to check either their alerts, the notifications, or any other changes that may be occurring, or if they haven't completed some of the other steps that we've asked them to do. They'll get an email reminding them constantly of the things that are very important. Now, it also has a movie in here that shows them how to navigate through the credit report and the importance of following through with some of the recommendations. Now, the report is broken down into different areas. It's broken down from public records to collections to any derogatory accounts that are open, any derogatory accounts that are closed, and the good standings that are open, and if there's any good accounts that are closed. So the movie shows them how to open the credit file up. But what I want to do is show you some things that are here first. So one of the things that we post for them are these credit alerts here. And again, what this will do is this will highlight in red to show them that they are within 7 days of the actual report date of that particular credit account. So that way they know, look, go ahead and make your at least your minimum payment on it, if not more. We also show their latest inquiries, and we also have factors from them. So these are source code factors that are used to determine their credit rating. So what you're seeing here is it will show them exactly what the reason is on the negative. Balances on bank card or revolving accounts are too high. We explain it to them, and then we tell them what they need to do in order to recover some or all of those points. And we also provide them with the positive factors. So that way they know what they've been doing and what's been going on with their accounts in order to show them stay in this direction, and then this will work out for you. And then we have other information they can match up to make sure their personal information as far as employment is being reported correctly. So I'm going to go back to the credit report, and we'll go in and I'll show you. They just click it, and then it will open it up, and then it will tell them here's a bankruptcy that was filed in 2013, and the point deduction is only 1. So it's not killing their credit score. It's only a 1-point deduction. Same with the lien. This is a paid lien that they made, and it was done in 2011. The next one are a couple of collection accounts. Looks like there was a $75 balance on this, and it's a 0-point deduction. But if they owe the money, if they agree they do, then we recommend they contact the collection agency or to TELUS Mobility and work out some sort of a pay plan with them to clear it up. And the same thing here with this medical collection. So it looks like they also have on their report an old um, automobile. It looks like the date of last activity was almost 2 years ago, and it shows as a charge off. It's a 2-point deduction, and if this information is being reported incorrectly, they can agree or disagree. If they disagree, then we ask them to get a hold of Ford Motor and speak to them and get the right information and ask them to update that to the credit bureau for them. So getting to where the weight is on this, we had spoke about it earlier that the point deductions are actually on this particular customer in the positive credit. So the very first account is Capital One. And so it looks like it's a positive account. It's been opened up. Their balance to high credit ratio is showing at 63%. And so what we're asking them to do is to make sure that they check their credit limits to make sure they're being reported correctly. A lot of times the creditor only lists the high credit. They don't list the actual credit limit. And so it's being calculated on the balance to that. So they can contact Capital One. Capital One can contact the credit bureau and provide them with the corrected information. Or if the information is correct, then we're asking them to actually use the manual simulator, which we'll go to in a few minutes, and it will show them how much they can pay on that account to recover some or all of these 11 points. It looks like with Canadian Tire Bank Card, it's a positive account, and it's showing as a 21 point deduction. And they've paid it on time all the time, but what we're looking at here highlighted in red is that the balance is showing 0, but so does the high credit. And so the way the scoring system works is that if it's 0 and 0, it's really no different than a $500 credit limit and a $500 balance. It's going to show that it's maxed out, and that's why they're losing the 21 points. So the recommendations again too would be to get a hold of their bank card and get them to get the credit limit reported to the credit bureau, and so that way they can recover these points. As we go a little bit further down to a couple of the other bigger ones, this one here too shows that they're at 90%, and so their balance to high credit ratio is high, and so it's costing them 22 points. And on this one at 24 points, it looks to me like their balance is actually over their high credit, so it shows they're not only maxed out, they're actually over. They're at 146%. So again, they would need to verify what their credit limit is and make sure that their credit limit is being reported correctly to the to the credit reporting agency. So, and we'll show you how that works here now that we're going into the simulator. Now, the members are provided with 3 different types of simulators. We have the target score simulator. It's an innovative product allowing you to enter a target score, and based on credit data will provide a plan to achieve your goal. The target score simulator uses the point deduction technology, which is analyzing your credit data, and it creates a list of recommendations. This information allows you to build a plan enabling you to capture or to build points in the fastest, easiest, most economical way. Now, the manual simulator, which I really like a lot because you can do different things with it, and I'm going to demo these for you on how you can add information and you can pay balances and do an accumulative of things to see how many points you can actually capture. And then we have the best use of funds, the money simulator. So if you have residual income that you want to use, then you can put it out there and make sure your money's being dispersed properly to get the most amount of points that you can gain. Now we have a video for them so that way they understand how all 3 of the simulators work and what's the best usage. So for purposes of just saying that all the information is being reported correctly, we'll put in a number in here for the target score. Now let's just say the target score on it is a 680. So you just simply type in 680 and you hit run. Now in here it says that they're requesting that you contact Canadian Tire Bank Card to get the actual high credit being reported, and you would gain 21 points. Paying $198 here would get you 24 points, 650 here, and $830 here. So they would actually achieve their goal. Thumbs up, 73 points, goal met. It would cost them $1,678. They would hit a 680 score, and the best time based upon their credit accounts of when they report to the credit bureau would be the 23rd of the month. So we'll hit start over. And let's go into the manual simulator, and let me show you how this works. So right now, again, they're losing 21 points here on the Canadian Tire bank card. So the credit limit is actually $2,000. So if they came in and they typed in $2,000 and they went down here to their Visa card, which is actually $1,500, and they typed in that information, and then say because they have good credit and they've been with Capital One for a while, rather than paying the balances, they go in and they get a $500 increase on this particular card. And they want to apply $400, leaving a $500 balance on this particular card. So they come in here and they can hit calculate my deductions. And by paying $400 and having their other information updated, they'll actually gain 54 points on their credit score. So instead of having a 607, they would be in around a 661 score for the $400. You can do different types of scenarios that are on there on paying balances or adding things up on increasing your information. Now, for the money simulator, let's just say they wanted to, out of their $2,200 in residual, they wanted to apply $600. And so they hit run. And so the recommendations are, again, to get the high credit being reported correctly to gain 21 points. And then they would pay $10, $82, $209, and $215. So they would actually pay $516. If they paid the other $84, wouldn't affect their credit score at all. And they would gain 35 points. So the next part of what we offer to them is the credit analytics. So the credit analytics works for the positive analytics, which will show what their score is, what the national average is, and what the score is to finance. It also keeps up if their score is going up and going down on each month when they get the reports. It lets them know the accounts by months on age, the oldest to the newest, and what their usage is. On the negative analytics, it's keeping up with any negative items they have and what percentage they are based upon the ratios from the negative to positive credit. Now, what I like is the credit analysis. Now, the credit analysis, we're keeping up with how many accounts they have open, what month they opened them, so we can see what their buying history is, if it's revolving, which months, and they seem like they're pretty equal all around the board, the installments, and any inquiries. What you're seeing up here at the top is what their credit utilization is. So they're utilizing 58% with revolving balances of $2,059, where the average is 30% and around $28,000. So they're good in one area, a little bit high on the other. We give them the bottom line, the summary, the positive features, and of course the negative ones on there, and listing the positive factors for them here as well. Now, a really cool part for this is on our analytics, we're also keeping up with them to let them know where they compare with other people. So for instance, what you're seeing here in green is this particular customer for their open good accounts versus the rest of the people that are in this 541 to 620 score. How many accounts do they have open? For instance, they have 5 revolving versus others in that score range at 2.76. Showing on the installment they're down, on the closed good, on the closed revolving, closed installments they're down, and same on the mortgages. Now we also keep up with them for their comparison on the oldest to newest months. So the goal is this. So, you can see they're in green. This is where gray is for the other people. If they're looking to take their score into the 681, 720 range, it gives them a target to show them how far they may be off or if they're ahead on some of them. And then we also keep up with the balance, the high credit ratio for them. So that way it may be, because it's an accumulative of everything that has to do with their credit score, what can they do in order to further things for them. Another important feature is our credit education course. So this is a 10-chapter course where they go through to understand about their, not only their credit, but also their finances. And so they'll go through, and as they pass one test, then they are able to move on to the next. And then we provide them with credit advice. So different scenarios, if they're how to improve their credit after a bankruptcy. It'll give them information on here on what steps they have to go through on how to reestablish and build credit. So this is the ScoreNavigator program, and it really helps and benefits people. It keeps up with their credit, and it measures each time going up and down. So they can only get themselves into a positive position, because we're not only going to teach them how to maximize their finances and their credit, but also be able to maintain it. Thank you.